Hey everyone, welcome back to Corporate Decoder, the place where we try to crack the code on what big companies are really saying in their official filings. Today we're diving deep into Elevra Lithium, Limited's latest annual report on Form 20F. Think of it as a yearly checkup that reveals all the nitty-gritty, the good, the bad, and the potentially messy details of their business. So buckle up as we decode Elevra Lithium's financial health, their strategic moves, and the big risks they're facing as they aim to power the future of batteries. Alright, let's get straight into it. This report filed with the SEC is our window into Elevra Lithium Limited's operations, covering their fiscal year ending the 30th of June 2025. Think of it as a company's diary, detailing all the important events and their financial standing. First off, it is important to know that as of the 30th of June 2025, Elevra had over 11.5 billion ordinary shares outstanding. That's a lot of shares, but things got even more interesting later. After the report's period on the 16th of September 2025, they did a massive share consolidation. Imagine taking 150 old shares and turning them into just one new share. This sounds drastic, and it was reducing their share count significantly. The idea behind this is usually to make the share price look more substantial and get it to a level that attracts more investors, like getting a single stock price to look more like 100 rather than a penny. Now, the biggest event that happened after their fiscal year ended was a merger. On the 29th of August 2025, Elevra, which was then known as Sayona Mining Limited, merged with Piedmont Lithium Incorporated. This was a huge deal, combining two companies to create a larger, seemingly stronger player in the lithium market. The report states that after the merger, both the pre-merger Elevra shareholders and the pre-merger Piedmont shareholders ended up owning about 50% of the newly combined company. This level of equal ownership is quite rare and suggests a true merger of equals. Aiming to bring together Piedmont's market presence with Elevra's production capabilities. They're expecting this merger to boost their efficiency and financial strength, which is crucial in the highly competitive lithium sector. But, as always with corporate filings, there are plenty of risks. Elevra acknowledges its limited operating history in the volatile lithium industry, making future performance hard to predict. They also point out that their development projects aren't guaranteed to result in profitable mineral extraction. This means all the money they spend on exploration might not yield anything valuable, which is a common risk.